The following presentation is intended for educational purposes only and does not replace independent professional judgment. Statements of fact and opinions expressed are those of the participants individually, and unless expressly stated to the contrary, are not the opinion or positions of Safe Federal Credit Union, its co-sponsors, or its committees. Safe Federal Credit Union does not endorse or approve, and assumes no responsibility for the content accuracy or completeness of the information presented. Attendees should note that the sessions are audio recorded and may be published in various media, including print, audio, and video formats without further notice.
Good evening, everyone. Thank you so much for joining us tonight. We are really looking forward to going over everything mortgages. My name is Katie Newman.
And I'm Ashley Galloway.
And we're going to cover a lot of interesting information tonight. Ashley and I both have been with Safe Federal Credit Union for about 10 years now. And we're excited to share our knowledge and the information, the tips and the tricks that we have learned throughout that time here with Safe. And we are just excited to get started. Some housekeeping rules we want to go over as we go through this process. First off, thank you so much for taking the time to join us tonight. We have muted everybody's microphone, so you're not able to verbally speak back with us, but we do have a chat box. If you have any questions or any information that you need to ask us, you can reach out to us via that chat box. This presentation is being recorded, and it should last about an hour. If any of the we will try to get as many questions covered as we can tonight. But if not, we will save those questions and cover them at a later time by reaching out to you later on. Also, we're going to be sending out our slides tonight to everyone who we have an email address for, so that you'll have it to refer back to later on.
And don't worry, like Katie said, we will address all of your questions. If we can't address them tonight, we will reach out and address your question later on. So if you want to pull up the chat box to ask questions or check out our survey at the end, this is how you would pull it up. So there's this, I guess you would call it a GIF, that shows you how to pull up the chat, whether you're on your phone or on the computer. So like I said, any questions you have throughout the presentation, feel free to submit your questions in the chat box. We do have a couple of internal people with us, Jenna and Steve. They will be answering your questions, or we can answer them if we see your question, and we can answer it throughout the presentation. Like I said, stick around until the end of the whole presentation, because there will be a survey at the end. And 2 of the respondents to those surveys, you'll win a $25 gift card
to Lowe's. Who doesn't want a $25 gift card to fill out a simple few questions for us, right?
Yes, and that can help you furnish well, not furnish, I guess, maybe like a mirror or something for your new house.
Absolutely. Hey, you can get a lot of things at Lowe's. All right, guys, so we're going to start our presentation off tonight with some mortgage myths. There's a lot of things you hear in the mortgage process, and we're hoping to kind of clear some of those out tonight. So starting off, we always hear that you got to have 20% down when you buy a house. That is absolutely not true anymore. Back in the day, you may have needed that much, but there is something that has been created called private mortgage insurance. For short, we call it PMI. But it is an insurance that covers the top half of your loan, which allows you to put less than 20% down. Do you want to know how much you have to put down, though, Ashley?
How much?
0%. You don't have to put anything down. That insurance covers you there. So we offer financing options up to 0% down because of that PMI option. So that myth is debunked, and you do not need 20% down to buy a house nowadays.
Wait a minute. So you're saying that you can do 100% financing on a conventional mortgage?
Absolutely.
Wow.
You hardly need any money now. No, don't need to save up $20,000, $30,000 to buy a house. Right? 0% down.
That's some good stuff right there. Next myth, PMI should be avoided. So PMI is actually a benefit, or again, private mortgage insurance. So what this is, it allows you to buy a house without having to save up that full 20% to put down, because it's insuring your mortgage. So you have the option to do 0 down, like we're saying, at 100% financing, because PMI will insure your mortgage. And again, at Safe, we have conventional mortgages that require zero money down.
None. Are you sure? Are you sure? Wait a minute. There's got to be some kicks, some tricks in there, right?
No hidden fees or hidden gimmicks in there.
I love it. I love it. All right. So how about our next myth here? The lower rate is always the better option. No, at Safe, sometimes the rates do get a little elevated, but Safe offers something called a simple modification. So this way you can buy the house you want and lower the rate later. That simple modification allows you to lower the rate once throughout the life of your loan, without having to refinance the whole thing over again. So you find that house that you want, and it's beautiful, it's gorgeous, it's your dream house, but the rates you just feel like are not where you want them to be. There's no such thing, Ashley, as the perfect time to buy a house. There's always going to be different things that fall into play, different obstacles. But if that's house is where you want it to be, we can work out to where the payment options where you want it. Rate may be a little elevated at the time, but we can put in that simple modification when rates go back down, and you can still have the home of your dreams.
Yes, and we'll go into that simple modification option later on in our presentation as well. And I do want to go back a second and answer the question from Becca. Do you have to have a certain kind of career to do 0% down, like a teacher? No, you do not have to. So this is for anybody, that qualifies based on your credit score. So minimum credit score of 660 and debt to income requirements. So there's a few products actually that we can do 0% interest with. So there's different debt to income requirements for those, either at 42%, 45%, and then the minimum credit score of 660 or 700, depending on that product. So no, you don't have to be in a specific career field to get that 0% down.
That's offered to everybody who qualifies for that product.
And then, sorry, one more question just popped in about first-time home buyers. So we do waive our origination fee for first-time home buyers. So that is the only fee that Safe charges actually to originate your loan here. Other places may have, underwriting fees, processing fees, and origination fees. Here at Safe, we just have an origination fee, which is a flat fee of $950. Other lenders would be 1% sometimes instead of a flat fee. So that means 1% of your purchase price. So for first-time buyers, we waive that origination fee. And then we also have other options of down payment assistance.
And we can talk about that later.
Yes,
yeah,
we'll
we got still got to get
later.
further down the presentation on that one. So tell them about excellent credit, Ashley.
All right. So some people think you have to have, 800 credit score to purchase a house, but that's not the case here. So your minimum credit score requirement is 620 here at Safe. I repeat, minimum credit score is 620. So no, you don't have to have excellent credit score. We do look at your credit history. So if you have anything derogatory, charge-offs or collections, yes, we would recommend to settle or pay those. So we would look at your overall credit history to determine, your credit and your credit worthiness to get a mortgage with us.
Ashley, we have another question come in. Wow, I'm loving all of these questions right off the bat. It says, hello, does the rate increase if there is 0% down? No, we do not risk-based price. So our rates are not based on your credit score or anything of that nature. It's based on your down payment and your term. So no, the answer to your question is we do not increase the rate if you qualify for 0% down. All right, ARMs are dangerous. ARMs have been looked at as a negative thing throughout history just because of the crash and how they were involved with balloon payments, but ARMs are coming back. They are coming. I have 2 of them.
Wait a minute. We're not talking about the arm that's attached to your body.
Oh, yeah, that's correct? Right. That's right. You got it. So an ARM stands for adjustable rate mortgage. And yes, that everybody hears the word adjustable and just runs for the hills. That just scares them to death. But rates can go up or down when they're adjustable. And one of the benefits to our ARM is a 5-1 ARM. So for the first 5 years, it's offered at a really low interest rate. It's fixed. After that 5th year, it goes into the adjustable rate term from year 6 to year 30. But it can go up or down. They do have They do have caps for every for every year, and then they have a lifetime cap on that loan. So you never have to worry about it going extremely high or extremely low or anything of that nature. Everybody wants extremely low though. But you're aware of what your rate could possibly be during that process. So these are making a comeback, Ashley. These are an excellent product to have. If you're not planning to stay in your home for a long period of time, these are definitely something I recommend to my members. Military who have orders for 3 to 5 years and are planning to move again, they can buy that ARM, save interest with a lower rate, then sell the house or refinance into a conventional product that's fixed if they want to later on. There's no fees, there's no holdbacks, there's no limit to how long they have to have that particular product.
Yes, and then this ARM is great to compare with the VA. So like Katie said, if you have orders and hey, I'm not going to live in this home for longer than 3 years, then yes, you may want to compare the ARM to a VA. So for the ARMs, you can go to 100% financing as well. So what I like to do is compare your PMI.
You can get no down payment and a lower interest rate.
Yes.
A double whammy.
Yes.
I love it.
Yeah. So that's why it's so great to shop around, compare rates, compare fees, to other lenders. So we don't do government loans in-house. So VA, that's a government loan. Someone in the military may want to get a VA loan, but I do always want to look at the ARM product as well, because that's the lower interest rate. Like Katie was saying, we can do zero money down. So we just have to look at what your private mortgage insurance quote comes to monthly and compare it to your VA funding fee. So I go over that with you. We can break down the numbers and I can let you know, which options, the pros and cons to each, and then you would decide which one you think better fits your needs. Also, another thing for that 100% financing, no, you don't have to be a first-time home buyer to get the 100% financing option. It's literally just 3 mortgage products that we have available, conventional mortgages at 100% financing. And then another question came in for, can you also have 0% down to have a house built? We do have construction to perm loans here, which we'll touch on later on in the presentation as well. But we require 5% down, which is still less than a lot of competitors. A lot of people or lenders want 15% or 20% down to build a home. Here at SAFE, you can build a home with as little as 5% down. But again, we will go over that construction loan in our products later on in the presentation.
Absolutely. So let's talk about renting is cheaper. Ashley, you want to cover that for them?
Yes. So renting is cheaper. Not necessarily. So whenever I was looking to rent a house, about maybe I would say like a couple of years ago, whenever I was going to build my house, rent for a single family home was $1,800.
That's a whole mortgage payment.
Yes. So I was like, scratch that. Never mind. I'm going to move in with my sister instead. So 3 kids, under what was the age then? Under 5,
Oh my goodness.
that was a little crazy at
Oh my
times, but
goodness.
it was definitely worth it instead of paying that $1,800 in rent.
You're paying somebody else's mortgage right there.
Yes.
And then you get nothing for it. So yeah, we can, the average loan now roughly being at 150,000, that payment is around $1,200 a month. So, I mean, that's less than the $1,800 you would pay in rent, and you get to buy your own home. You're not paying somebody else's mortgage. So yes, that's debunked for sure. Renting is not cheaper than buying a home.
Yes. And then, so when you own your home, every time you make a mortgage payment, it's an investment in your own finances. So when you go to sell that house later to maybe upgrade to a bigger home, you're going to gain equity by paying your mortgage. And then when you go to sell it, you can earn money off of selling your home and then put it into your next home.
Right, let's move on here to the next slide. So now we're going to talk about the simplified mortgage process. So this particular process we're going to go over is directly how we handle our loans here at SAFE. Ashley and I have very similar processes and how we do things. So we definitely want to go over this with you guys tonight and just kind of give you a step-by-step look at what it's gonna be like going through that process.
Right. So just a simplified version of the mortgage process. First step, you want to get pre-qualified. So with that, here at SAFE, you can either call over the phone, talk to one of our internal mortgage loan originators, visit a branch,
Us.
which is
Mortgage
us.
originators,
Yes, we're
us.
external mortgage loan originators. So if you want to visit a branch, we may not be there, but they will definitely get your information for us to give you a call back. We can key your application over the phone, or we can schedule an appointment if you'd rather meet face to face to start your application. And you can apply online as well. So the actual pre-qualification app maybe takes 15, 20 minutes at the most. But in my process, I do like to ask some questions beforehand before I start an application, which I'll go into further detail later on. So once you key your application, we do pull credit. We pull a tri-merge credit report and we use the middle score. So remember the minimum credit score I said earlier?
620.
Yes. So that middle score, we want to make sure it comes in at 620 or greater. And then
That doesn't even have to be your lowest score. It just has to be your middle score.
Yes,
I love
exactly. Yeah. So once you do that, we get you pre-qualified. We will email you a pre-qualification letter. So I normally like to ask, hey, are you working with a realtor? So if not, I do have realtors that I do like to work with that are local, that are great to work with, care about their members. So I do have references that I can give you if you have no idea on who you want to use for a realtor. So I'll give you those references. You can do your own research and choose whoever you like to choose. Don't worry or don't fret whenever if you do meet with a realtor and they want you to sign a buyer's agreement. So legally, they now have to get you to sign a buyer's agreement.
And this has become something fairly new now that we've noticed with our agents and with the laws that have changed. This recently just took effect. So you may have not had to do one in the past, but if you're looking at buying another home now, this is something that has come up fairly recently.
Yes. So we want to mention this. You can sign this for a day. You can sign it for a couple weeks, whatever you feel comfortable with your realtor. But yes, you do have to sign this agreement for them to actually show you a house now.
So if they put a contract in front of you and it looks kind of scary or sketchy, don't worry about that, or don't fear that. This is something fairly new that has gone into the process that agents are required to have you sign in order to see those houses.
Yes. So another thing to keep in mind that's fairly new is compensation for your agent. So before in the past, the selling side used to pay for all compensation for the seller's agent and the buyer's agent. Now there is an actual compensation agreement that you will sign stating who is going to pay that, the seller or the buyer. So keep that in mind as well. And you may want to ask your realtor these questions up front to get some further information. So if you do have a realtor, I can CC them in the email for the pre-qualification letter. And then their mortgage journey does not start until we actually have a ratified contract. So once you get the pre-qual letter, you can go house hunting. Okay. Once you find your dream home that you love, then that's when you'll submit your offer in with your realtor. They'll help you write up your contract. And I do recommend to get a realtor because they can handle and negotiate your side of things while the selling side would handle their own side. So once you have that ratified contract, that's when you'll email it to your originator, your mortgage loan originator, to get your mortgage process started.
Ashley, we have a couple questions I'm going to insert real quick if that's okay. Yeah. So when we talk about the credit pull itself, it is a hard pull. It is a hard pull in all three credit bureaus. That was one of the questions that was asked. Was it a hard or a soft? It is a hard pull. So when you don't want to take that decision lightly when it's time to move forward, you want to make sure that this is something you want to do. But I like to always talk over things with my member, and we don't pull credit until they're ready. But yes, it is a hard pull. Let's see. Another question came through. Does the pre-qualified letter approval expire? It does. Our pre-qualifications are good for 120 days for free. We do not charge you to keep it 30 days, 90 days, 60 days. It is for free for 120 days. That is completely outrageous, and nobody offers that, but Safe's got your back.
All right, just going back on these questions, making sure we answered all of them. Okay, so it looks like we're caught up. All right.
I think so. It's the ones I've caught so far anyway.
Okay.
Keep on rolling.
All right, great. Okay, so once we get the ratified contract, like I said, that's when your mortgage journey begins. Okay. And so, yes, you'll get a lot of information up front when we key your application. and start the process. But you don't have to remember every single thing that we tell you, because we are here to guide you step by step throughout your journey. Okay. So once you submit your contract, that's when our processor is going to have 3 business days to send you your disclosures, which sometimes they can send them electronically, or most of the time they send them electronically for you to sign those. And then they'll also send you a commitment letter with a list of documents that will request from you. Okay. So while this is all happening, your realtor also will be ordering inspections. So this will all take place before your due diligence period will end. So this is going to be your home inspection. We don't require a home inspection, but we do recommend one. And then that will also be your termite inspection. So in your contract, you'll agree on whether the seller is responsible for the termite inspection or if you're responsible as the buyer. So a termite inspection also is referred to as a CL 100 as well. So we do require the termite inspection up to a certain loan to value. So we will have that. And then keep in mind, these are going to be extra costs out of your pocket as well during your mortgage journey. So I would say a home inspection might be maybe 300 to 500 roughly.
Yeah, I think mine was about 325. So
Yeah.
within that range.
And then the termite inspection, that's going to be, I've seen roughly around $125 on that.
I agree on that one. I think that's roughly about the price of it.
So yeah, so those are some extra expenses that will come out of pocket prior to closing that you want to keep in mind when you're saving up your money. So once we gather your documents from you that we requested and get your signed disclosures back, then we can order your title and appraisal. Okay. So another fee that will come out of pocket will be your appraisal fee. Right now that's at $550. And then there's a credit report fee for a single applicant. It's $45 right now. And for a joint application, it's $90. So those fees we do collect at the time that we order a title and appraisal. So those roughly take maybe about, a week to 2 weeks for those to come back in. I do want to say, after you submit your documents and sign those disclosures, you kind of can just sit back and relax and hear for updates from your MLO. MLO means the mortgage loan originator. So you can sit back, relax, wait for updates from us. Once we get those in, we'll let you know, and then you'll go through underwriting for final review, get a clear to close, and then you get to attend closing, which also here we do help you, like I said, every step of the way, and we do help you with getting your funds, to closing, making sure you sign your closing disclosure 3 days prior to closing. You're able to get your check or your wire funds to the attorney for closing as well. Anything that you think you can add to that, Katie, that I might have missed?
No, I think you covered it pretty well. And a lot of this is just us kind of explaining how this goes. It seems a bit intimidating because every step seems like it takes a whole lot, but a lot of this is done behind the scenes by us. We take care of all of it. We stay with you step by step. We explain the process multiple times. And of course, we have ways for you to reach out to us for any questions or concerns. We are your partner in this process, and we work with you and your agent to get you from start to finish as easy and smoothly as possible. So no, I think you covered all of it.
Yeah, and it's so important to have the right MLO, the right realtor, to have the best team to make it a smooth process for you as well.
Absolutely. This is a huge step. So you want to make sure you've got the best team behind you, supporting you all the way through it. All right, guys. So let's kind of get into our products a little bit. What does Safe have to offer me? So let's start with purchases. Of course, Safe, we're going to cover, had this question earlier, but yes, we do offer an incentive for our first-time home buyers on a purchase. We waive the origination fee of $950. So we charge you nothing to do the process of the application and moving forward with that process. So that's one benefit to our members. We do offer 100% financing. And then we also offer something called an 80-20 financing. And that's another form of 100% financing. It's just cut into 2 loans, and that credit score requirement is a little lower than just the single loan of 100% financing. So when we look at what product works best for you, we're going to look at all options and lay everything out on the table to determine what's the best thing that will work for you and your family. And we do also have down payment assistance programs. Our first program goes up to 80% of the income median to get you qualified, and that's for first-time home buyers and for our community partners. That down payment assistance can range from $12,500 to $50,000. And then we also have a second program, our Work Plus program, or excuse me, Workforce Plus program, which offers $15,000 to those who are in the 80 to 120% median income. That seems like a lot of information there, but Ashley and I know how to look that information up, how to find that to make sure you qualify for it. Another product we offer here are refinance products. So we do offer the cash out refinance. If you need to take out money on your home to go on a vacation, or you need to consolidate some debt, that cash out refinance product comes in handy. It refinances your first loan if you have one, adds funds to it, and then you can pay everything back in a single monthly payment until it's paid down in full. We also do rate term refinances. Rate term refinances basically takes your mortgage that's at another institution and brings it over to SAFE. We adjust it to our rate and adjust that payment probably a little bit lower, just depending on the amount we're doing. But it moves your mortgage from one company to another. And then we also finance up to refinance up to 95% of the value of your home. So most institutions stop at that 80% mark. SAFE goes all the way up to 95%, which is just wonderful, crazy. I mean, who could offer anything better, right? And then we also have low closing cost refinance options, which are called freedoms. Those are our in-house portfolio loans. They go up to 75% of the value of the home, and closing costs are usually less than $1,000, just depending on how things are set up with that particular loan. But Ashley and I can always give more information if that is a product that is you may be interested in. But we offer multiple options as far as the purchase and the refinance go.
So just to break down that 95% loan to value, just to keep numbers simple, if your home is worth 100,000, that means you can borrow up to 95,000. Okay, because that's 95% of the value of your home. So, you may want to do a cash out refinance if you want to go to Disney or something like that. I just went on a Disney cruise recently here, and I know
Yes,
Katie
you
did not
did.
to go to Disney. So keep that in mind. That's a good option to take a cash out refinance. Maybe not for Disney, but maybe for a debt consolidation to put you in a better financial
Put a pool
position.
in your backyard.
Yes,
Right?
yeah.
I've had members do that.
Yeah, and I'll touch base on the home equity in a little bit for maybe a pool as an option too. But down payment assistance, another thing I wanted to mention for that, those programs that Katie was mentioning for community partners. So that is going to be anyone like in the medical field, school district, military,
Police, firefighters.
Yes. So that can be the 15,000 that Katie was referring to for down payment assistance for a community partner. And it's general. So I helped a member and they were a custodian at a school district and they were a first time home buyer. So she got her origination fee waived. She was able to qualify for the down payment assistance. And since she was a community partner, she got $15,000 towards her purchase.
That is awesome.
Yeah, so she had to bring basically no money to closing. She had money left over actually to buy down her rate. So just keep that in mind. It's not a specific field. Like you don't have to be a teacher in the school district to get those down payment assistance funds. It's general. All right.
Oh, we have a question on that.
Yeah.
So does down payment assistance have to be paid back? So yes, they do have a rule as far as the payback procedures go. If you stay in the home for 5 years, the down payment assistance is completely forgiven. If you end up selling the home or leaving the home within the first 5 years, it is prorated depending on how long you have lived in that house.
Got it. So next product we want to go over is construction. So as I mentioned earlier, I did just recently build my house, and yes, I did finance through SAFE. I did our construction and perm loan, and it was a great, smooth, easy process. Okay, so minimum of 5% down is what we require for our construction to perm loans. We have a one-time closing. So that means, you do the application and do that mortgage process that we went over earlier, close, and then you have a year to build. Okay, so during that year build, you're paying interest only payments on what your builder draws out. Once your home's complete, you modify to a permanent loan. So there's not another closing, which means there's no other set of closing costs. So that saves you some money there. So when you close, that's going to put you at like say 7% for the interest rate possibly. And then when you go to modify, to the permanent loan, it's still going to be that 7%. Your rate's going to stay the same throughout the construction loan because it's a construction to permanent. And then you can use your land equity as part of your down payment. So if you owned your land already, then yes, that does help with costs out of your pocket because you can use that equity as a down payment. And then we'll actually calculate the numbers for you to help you break that down. So I always tell members whenever I meet with them, I probably would never have built if I didn't work in the mortgage department because I would have never known where to start. So it's really a big thing for me to spread my knowledge to our members, so then you can also build your dream home, so don't be afraid to ask. Don't be afraid to call us, ask us questions, because we're more than happy to answer all your questions for you. It's also great, if you're thinking about building in the future, to give us a call as well now, so you can start taking those steps so you can build, when you're ready to.
Absolutely. We have a great financial counselor in-house that helps our members with getting credit built up, with
Creating a
saving money,
budget.
creating
Mhm.
budgets. She's wonderful as far as helping everyone get set up to get in the position to come to us to start building their home or,
Mhm.
purchasing their first home, anything like that.
Yeah, or if you're just wondering if the numbers work or how they're going to work, how much money you're going to need to put down, that's what we can do for you as well to calculate that, to give you estimates on the payment so you can decide, is this a good move for you or not? So, like I said, don't be afraid to reach out. You can give us a call to ask those questions. And then, oh, okay. So, like I said, interest only payments. I'm just reading these bullet points to make sure I covered everything that's listed. So, compared to other lenders, as I mentioned before, it's a lower down payment. So, 5% versus putting 15% down or 20% down. Yes, your builder does have to get approved through us in order to build your house. Okay, but that's going to protect me, or not me necessarily, sorry, safe.
Credit union.
So I am
Everybody,
safe, yes.
everybody.
So that's going to protect safe and also you. You want to make sure the builder that you choose is qualified and has enough assets to build your home. We don't give any money up front either. So make sure any builder that you speak with, they understand you're not going to get any money up front to start the build. You're going to get paid on a percentage of work completed. You don't want to give a builder any money up front and then they run off on vacation, like I said, to Disney with your money and not start the build. So
I always like to use the example, you have the guy that comes to your house to fix your HVAC system. You don't hand him a check when he walks in the door. You want him to do the work, service the HVAC system, and then you pay him for his work. That's how we do our processes here.
yes, yeah. So just keep that in mind. But again, we can remind you of these qualifications when the time comes if you are thinking about building. So the next product, or just kidding, let me go back and answer some of these questions real quick before I get ahead of myself.
Yeah, let's check the questions real fast.
So eligibility for a down payment assistance. So there's an average monthly income that your household income has to be under basically. So there's an average monthly income in your county that you're looking to purchase a home in. So we do have to ask you how many people will be living in your house with you. Anybody that's 18 years or older, we do have to include their income in the total to see if you qualify.
Because it's by household income, not
Mhm.
just borrower income.
Yes, so that means if they're not on the mortgage application with you, but they live in the house, yes, we still have to add their income, get their income documentation, submit it for approval and review to qualify for this down payment assistance.
But yeah, we'll have our contact information at the end of the presentation. So if you have any further questions or if you need us to check to see if you qualify for that particular down payment assistance, we'd be glad to do that for you. All right.
All right, great.
Let's keep going.
Oh, go back.
I am so sorry.
Sorry. Wait, I didn't finish my one product. So this is an option for you if you wanted to look at taking out equity on your home. Say if you wanted to not touch your first mortgage, say if that's at like a 1% interest rate
That would be nice.
and you don't want to touch that. and you want to take the equity out though that you're sitting on for your home to get a pool, like Katie said. We know pools are pretty expensive nowadays, probably runs you about
I say
$50,000.
40 to 50,000 for a
Mhm.
decent one. I mean, you can go to Walmart and get the $1,000 one, which you don't need it for. But if you want a fancy one in the ground with like the little wave pool like I want, yeah, you gotta have the nice fancy stuff.
Yeah, so this is a great option for you. It's a home equity loan. So that is where it's a second mortgage and you can take out the funds all at one time. You'll get them all at closing. It's going to be for a set term, which can be a 10-year term or a 15-year term, and it'll be for a fixed interest rate. So that's a great option for someone that's wanting a lump sum of money at closing, pay it off and be done with it. So like the pool, or if you wanted to do debt consolidation, pay off, credit cards at that high interest rate, consolidate any loans together. A HE loan or home equity loan is a great option. And that can give you a lower monthly payment as well. So
We've even had people use home equity loans to purchase land, or refinance their house as a cash out refinance to purchase another home because they're using their primary residence. So the rates are lower, the terms are longer compared to doing an investment property, a loan, a land loan, things of that nature. So these are really good products to fall back on if you have that equity.
yeah, and then just to compare, so a home equity line of credit is an option as well. So that's probably what is most commonly heard. So a lot of people think, oh, a home equity line of credit is the only option for me to get a second mortgage on my property. So a home equity line of credit is revolving. So you can use it, pay on it, use it again if you want to. It is a variable rate and it's going to be based on like a 10-year period, and then it'll be reevaluated again if you wanted to try to keep it open for longer than that.
Absolutely.
The payment on that is higher than a home equity loan though. Payment is calculated by multiplying 1.8% times your outstanding balance. So this would be good for maybe if you wanted to do home improvements little by little. So say you want to upgrade, your bathroom, do that, borrow against the home equity line of credit, pay it off, and then do a next project. This would be a good option for you. So for both of these options, you do have low closing cost fees. So generally, it's usually $1,000 or less for total closing costs. No appraisal could be a possibility if we can use your taxable value, or if we can find a comparable value in our comparable system. So that saves you money too on those closing fees. And we can go up to the 95% loan to value. So that's another great benefit. Most other lenders go to just the 80%, like Katie was telling you guys about. We can go up to actually 95% of your value.
More equity, more opportunities, more possibilities.
Yes. Wow. Like that.
Yeah, right? My own little slogan there. All right, guys. So let's talk about the 3 key elements to getting pre-qualified. So the first one's going to be understanding your credit. So when we're looking at credit, one of the main things we look for is to make sure that you have at least 3 active trade lines. So we're talking a personal loan, a credit card, an auto loan, something where you have had credit in the past. We look for at least 3 minimum trade lines. And then if you maybe have 1 or 2 or none at all, we can look at using possibly non-traditional trade lines, things such as your cell phone bill, your rental history. I think we've used insurance before, depending on what it is. So we have other ways of looking to create that credit. But when you're looking at building your credit and wanting to purchase a home, that's one of the main things you want to try to focus on is creating those trade lines. And when I say trade lines, I mean like a loan that you've had that you're paying on that has some history to it. So an auto loan you may have paid on for 6 months. It shows there's no late fees. It's paid on time as agreed, things of that nature. So that's what we mean by trade lines. We also want to look at considering or clearing up any derogatory issues on your credit report. So you can actually go to annualcreditreport.com once a year and print off your credit report for free. They allow you to annually print it for free once a year. And you can look on that credit report and see everything showing. And that's what you want to do. You want to look for any kind of derogatory information on that credit report, collections that are there, late payments, Any collections you may want to clear up, you can also call those companies. Sometimes they may offer settlements that you can pay to get them paid off and cleared up. And if you've had some late payments, you want to make sure that you are making those payments on time every time, letting some time pass so that that good credit history can kind of soak back into your report. Anything you want to add on that one, Ashley, as far as credit goes?
Maybe just active, meaning that you're currently making payments on it. So just 3 active trade lines that you're currently making payments, so we can see, yes, you can make monthly payments on time. Just to backtrack too, I do want to answer Melania's question about explaining the difference between a home equity loan and a refinance. So technically, a home equity loan or a home equity line of credit is a refinance on your home.
Under that umbrella term.
Yes. Yeah. So you are refinancing your home to get a HELOC or a HE loan because you're taking out the equity. We're using your home as collateral for these products.
The difference mainly between those would be a cash out refinance is a first lien position loan. It takes priority as far as the liens that are placed against the deed. And then a home equity loan, excuse me, is a second lien position.
Yep. So for the second lien position ones, you want to look at those probably if you have a first mortgage that you don't want to touch at the lower interest rate, like I was saying, and take out the second mortgage. If you own your home free and clear, yes, it would still be a refinance, but we do have other refinance products that would possibly be a better option at a lower interest rate. So it kind of just depends on your situation. It depends on your situation to see what's the best option for you.
All right. Sorry. I got a tickle. Excuse me. All right. So second key element we're going to be looking at.
I can go over the second one. Yeah. So, as I mentioned earlier too, before I even key my pre-qualification app, I do like to go over preliminary questions, and these are the questions I do like to ask about. So the credit, I usually like to see where your credit's around to get an idea of which products might be best for you. And then assets is the second question. Have you saved up any money to go towards your purchase? So, you want to make sure that you save up money in an actual institution, like in your bank account, and do not save up cash at home. Okay. So if you have cash at home, like buried in the backyard, please dig it up and deposit it in your bank account. Okay. So if we cannot source, like if you have like $5,000 and that is a large deposit, over 50% of your gross monthly income, we have to source those funds if we're going to use it for our mortgage. Okay. So you want to make sure you deposit the funds. They have to season in your account for at least 60 days if we cannot source it, for you to use that as part of your down payment or closing costs. So a minimum of 3% down. I know that says that on there. Yes, we do have that 0% option. But say if you don't meet the qualifications for the 0% down, the next tier would be putting 3% down. So that would be the 3% of whatever your actual purchase price is. So assets, you want to make sure you have funds for the down payment, closing costs, and prepaids for escrow. So I would say closing costs and prepaids for escrow probably range anywhere from 5 to 7,000 roughly. The closing costs or any fees that are associated with getting the mortgage, so like your attorney fees, appraisal fee, anything like that, origination fee, and then your prepaids for escrow, that's going to be your taxes and insurance. So when you buy a house, we do collect the funds to pay your insurance for the first year.
Okay. Actually, we have a question on assets. Can I start it with you real quick?
Yeah.
Someone asked, can retirement funds be used for down payment?
Yes. So yes, you can borrow from a 401k if you'd like to do that, and that can be used toward your down payment or closing costs. Great question. So yes, if someone says no, they don't, whenever I ask that question, if someone says no, I don't have any funds, in my bank account on hand right now, then that's the question I asked. Do you have a 401k that you could borrow from? So yes, great question. And then another option would be a gift from a relative as well. So back to assets. So taxes and insurance, the escrow part of that. So that's what I was saying we would collect for at closing. So down payment, closing costs, and prepaids all go into your total cash to close amount. And then bear with me just a second, just reading to make sure I'm caught up on these questions.
We are.
Okay, so there is a question about debt to income, I see. So any resources to calculate debt to income. So I do believe we do have resources on our website.
Yeah, we have several calculators on our website that you can use to look at things like rent versus own. I'm not sure if there's a debt to income calculator on there.
But to put it simply for you, you do add up all your monthly debts that would report on your credit. So say if you have a minimum credit card payment, auto loan payment, personal loan payment, you'll add all those up, plus your new mortgage payment, and divide it by your gross monthly income, and that'll give you your debt to income ratio. So we usually like to stay under 45% for debt to income. You can also calculate it another way as well. If you just multiply 45% times your gross monthly income, and that gives you the dollar amount that all your monthly debts need to stay under to qualify. All right. So next, debt to income. So that's actually our next
We're just
topic.
digging right into that one.
Yeah, so this is the last question I like to ask before I actually hit the pre-qualification app, just to make sure you are comfortable with the payment. So debt to income max 45%, like I said. Yes, there is a different debt to income max for 100% financing, depending on which product you go with. And that debt to income max would be 42%. But when the time comes, when we talk to you and go over, all of these questions, we'll figure out which products are going to fit you best, go over, all your options, and then you can choose which one you prefer. So 2 years of employment. So that is what we collect in our application. We want to know 2 years of work history. So we usually ask your employer name, address, phone number, start date, end date for a 2 year span. And then 2 years of complete tax returns if you are self-employed. So we will look at the net income after expenses on your tax returns if you are self-employed. And then we do have to have that 2 years worth of completed tax returns. And then also on rental income too, for us to use that, we like to have the 2 years of completed tax returns to include rental income or to be able to use rental income. If you're a W-2 employee, though, we do want your 2 most recent W-2s and then your 3 most recent pay stubs. And so in my question, I do ask you, what are you comfortable with paying a monthly? Okay. Or I ask, how much are you wanting to spend on your home? Okay. So with those 2 questions, if you tell me a max amount that you want to pay monthly, I can put in my calculator and determine what we need to stay around for your purchase price. So other places, they may key your application, don't ask you any questions, just max you out at your max debt to income limit and say, hey, you're pre-qualified for a $500,000 home. So here at Save, we don't do it that way. We don't want to max you out on your debt to income. We want to ask you these questions to make sure we are, fitting your needs. So we want to ask you, what's the max amount that you want to spend on the house? Okay, because I don't want to give you a pre-qualification for $500,000. Your payment is what, $3,000 and $4,000
Through the roof, for
if
sure.
your max payment is $2,000 for your budget. So
we don't want to set you up to be house poor.
Yes.
That's what we like to say.
Yes. Yeah. I know you love, whoever you live with in your household, but I'm pretty sure you don't want to just sit there every day and just stare at them and not be able to go out and do fun stuff.
And only make your mortgage payment.
Yes. Yeah. So we don't want to make you house poor. We want you comfortable. So that's why we ask these questions.
All right. Oh, there we go. Okay. So now we're going to look at going over payment examples.
Yes. So this kind of goes into what I was just talking about.
Right.
About what I like to do, prior to keying an application. So sometimes I ask, what's the max payment that you want to spend monthly? And if someone tells me $500, then that's when I have to key in, the payment and let them know, hey, for $150,000 purchase price at 100% financing, meaning no money down, If I use just an example rate of 7% for a 30-year term, your payment's going to be around, $1,297.95 a month, because you've got to factor in escrow, which is the taxes and insurance, and then private mortgage insurance. So private mortgage insurance, remember, is added on to your monthly payments if you don't put at least 20% down. So we use estimates whenever we're giving you this payment because we don't know what house you're buying yet. So we don't have your homeowner's insurance quote, we don't have the property tax estimate, but we just have a general idea of, for this dollar amount home, this is what it's going to be. And then private mortgage insurance, that's really going to be based on how much you're looking at putting down, your actual credit history. And then once we key your application and pull credit, we also will run your PMI quote and we can give you that dollar amount at that time. So it could come in less than the $100, or it could come in more. So this is just a good idea, though, as a general estimate on $150,000 purchase price.
Yeah, those are going to come in case by case, just depending on what's going on with that member and where they sit financially as to what that PMI quote will be.
I just saw a question come in for sourced funds. Is that money you have saved? So I'm saying that if you deposit a large amount of money in your bank account, greater than 50% of your gross monthly income, and we don't know where those funds came from, we have to source it, meaning we have to have a paper trail or know where those funds came from. So if you took mattress money.
Yeah, we don't like mattress money.
Cash from under your mattress and deposited it as a large amount, we have to source it, and we don't have a paper trail for it, then we aren't able to use it. So it's going to have to season in your account for a certain period of time. So that's what I mean by we have to source the funds if it's a large amount.
We have to make sure that they come from a legitimately accepted source, basically.
So if you sell a vehicle, say if you sell a vehicle for $5,000 and you have cash that you deposited in your account, but then you have a bill of sale that says you sold this vehicle to whoever, and it matches, $5,000 on that bill of sale, that is a document that we can use to source those funds.
Absolutely. That was a good question.
But the best case scenario, just save up as much as you can in your bank account. So if you get your payroll check direct deposited, transfer some of that money into your savings. Don't take the cash out whenever your direct deposit hits. Take cash out and save it at home. Just transfer it to your savings, save it in there. And then keep in mind, you may want to transfer it to a Power Up checking. So we have a Power Up checking option here at Safe, and you can earn 4.25% interest on that checking account.
That is outrageous. Nobody offers that much interest. That's crazy. I love it. I love that we have those kind of products.
Yeah, so you can earn that 4.25% on up to $20,000. And so say if you had $20,000 saved up and it was sitting in there, it could be about $60 to $70 monthly that you could be earning by just having your money sitting here at Safe in that Power Up checking.
Who doesn't want free money?
I know I do. I need some extra money on these higher grocery bills.
Yes, tell me. Tell me about it. We need some extra money.
Yes, Tiffany, you know about that Power Up checking account.
All right, so let's go over some this versus that. So I did see earlier, I think we had somebody ask a question about pre-qualified. So I wanted to explain the difference in pre-qualified versus pre-approved. So a pre-qualification requires that credit be verified. Income and assets are verified during the processing portion of it. So when we do your application and we pre-qualify you, we have verified credit. We've looked at everything on your credit and all of that looks good. We use stated income and stated assets. So as long as that information is basically honest, givenly to us up front, then later when we go to verify it, everything will be good to go. And you can, these particular types of pre-qualifications usually can be done in about 30 minutes. So usually the same day. Which allows you to get out into the world and look at the houses a little bit faster, which is what everybody wants. A pre-approval requires that the assets, credit, and income all be verified. Sometimes that can take a day or two to do so, and getting all the pay stubs in, the W-2s, making sure the numbers work out, getting the bank statement. So pre-approvals aren't always the fastest process, but they're a little more in-depth than the pre-qualification is. But the pre-qualification gets you the opportunity to get out there faster and look for the house that you want, which is one reason why we do offer those pretty frequently.
Yeah, so don't be afraid to ask us for a pre-approval letter. It's because sometimes realtors do prefer that. if you're putting in an offer, they may ask, hey, do you have a pre-approval letter instead of a pre-qualification? So yes, we can still do that, pre-approval for you.
Absolutely. As long as you're willing to, wait that time for us to go ahead and get those documents verified, we are absolutely up for doing the pre-approvals for you. But generally, we just push out those pre-qualifications just because they can be a little bit faster. So rent versus own. So this is always a big one. We did talk about this earlier. The current overall average rent in South Carolina is $1,247, which just so happens to be very, very close to the $150,000 mortgage payment we looked at earlier in our example. And most average rents right now, I mean, they're through the roof. So yeah, that's the average rent is roughly the same as buying a $150,000 house.
And it's not going down. Everyone I've spoken to recently that are renting, that are looking to buy, they just say that their rent keeps increasing and they're tired of paying someone else's mortgage off.
Absolutely. So just like Ashley said, you're paying for someone else's house. So you want to make sure you want to pay for your own home and not pay for someone else's, especially if renting is actually not as beneficial as buying your own home.
All right. So FHA versus conventional. So as I stated earlier, here at Safe, we don't offer government loans. So an FHA product is a government loan. Sometimes when first-time home buyers call in and I speak with them, they say, hey, I want to apply for an FHA loan. But we don't offer government loans here, but we have something better actually. So conventional, we can do 100% financing on here at Safe. FHA, they actually require 3.5% down. Okay, so even if you don't qualify for the 0% down, our next tier is still better than FHA down payment. Our next tier would be 3.01% down versus their 3.5% down. Another thing is their PMI won't fall off for the life of the loan unless you go to refinance. Okay. On our conventional loans, it falls off automatically when you hit 78% loan to value. You also have the option of having that taken off manually after having PMI for a year. And if values of homes increase again, like it did in the past few years, you can always call us to order an appraisal. We order that appraisal, collect the fee. Like I said, it's $550 right now. If that appraisal value comes in high enough where we can drop your PMI, we'll drop it off manually. And then appraisal restrictions. So on government loans, there are more restrictions whenever there's appraisals. If there's a stairway that may need a rail, like a railing for a stipulation, or certain like GFI breakers or outlets. So FHA and like VA products, they're going to be pickier on those certain things in the house versus conventional. We're not as picky on that end. So some sellers actually, I know whenever I was selling my house, when I looked at the offers, I looked at, if it was like a government loan, FHA or VA loan, because I knew they were more strict on, the home inspections and more strict on appraisals and things like that. So sellers may look at that and they may want a conventional product instead of a government product when accepting an offer. So that could be to your advantage. And then, yeah, so like I said, FHA is not just for, a first-time home buyer. That's not the only option out there for you. You can go conventional. You can do 0% financing possibly instead. So just ask the questions, and that's what we're here for, to educate you and let you know if you're a first-time home buyer, no, you don't have to do an FHA product. Right, so fixed versus ARM. So a fixed rate,
not your body arm.
Yeah, again, not your body arm. So that's a adjustable rate mortgage. So fixed rate versus adjustable rate. So we kind of touched base on this as well earlier, but a fixed rate, so that's going to be for a set term, the rate is never going to change. So if you do a 30-year term, you don't have to worry about the rate ever changing within that 30-year period. And so that's, could be good for a long-term purchase, or if you know yourself and hey, I don't want to keep track of the rates or want to have to worry about refinancing later on, then you may just want to go with a fixed rate option. So with a fixed rate product, we have what's called a simple modification available for $500. So say today, if you closed at 6.25% and the rates next year go down to 5%, and you're like, dang, I really want that rate. All you have to do is call us, say you want to do a simple modification. We collect that fee of the $500. We go in, adjust your interest rate and your payment once throughout your 30-year term. Okay, so you can do the simple modification once throughout your term, but you can refinance, still whenever you want to. So the simple modification just prevents you from having to do an actual, mortgage process, actual refinance process, and saves you from having to pay those closing costs. Whenever it's just $500 versus refinancing closing costs, I would say maybe it might be around $4,000. So that's for the fixed rate product. Great product, fixed rate, simple modification option. So I'll give you those pros. And then the ARM to compare to, adjustable rate mortgage. It's going to be at a lower interest rate. Okay, it's going to be fixed for 5 years. So like we said earlier, that's a great product for, anybody that has orders here that know, hey, I'm not going to live here past, or not, live here past 3 years, because it's going to be fixed for 5. So you're going to take advantage of that lower interest rate, which in turn gives you a lower payment. So every year after that 5th year, the payment could adjust according to the market. But thankfully, there's caps to every adjustment of 2%. So let's give you an example of, just say randomly, if the interest rate's 5.25% for the ARM and year 6 comes around, that means the max it could ever increase to would be 7.25%. Okay, the rate would never go below the starting rate of the 5.25, but it can go anywhere from 5.25 to 7.25 in year 6. There's a lifetime cap of 5%. So in this example, the rate would never go over 10.25%.
And if the market's rising with those rates, you'll cap out and won't go any higher when everybody else has to buy those houses with those higher rates.
Yep. And then you can refinance out of this product, anytime. There's no penalty to pay it off early. So anyone that goes with the ARM, I just want to, reiterate to make sure you've always have income, coming in that's sufficient enough, and that you keep a good credit history, because whenever the time comes for you to refinance, you want to make sure you can re-qualify again. So you have to understand that, yes, you do have to re-qualify to refinance.
All right, so let's talk about why SAFE. Why go with us? So first off, we give you a 120-day rate guarantee. We offer a float down rate right before closing as well. So when we're processing your application, and let's, for example, say you're offered a 7% rate when we start your application, that rate's good for 120 days. Right before we go to closing, when our underwriter is doing her final check, she will check our rates. If the rates have lowered since your initial rate was offered, she will automatically float it down before giving your file over to closing. So it's a free offer of a float down rate, even though your rate was pretty much guaranteed for 120 days, but it will not increase. So that 120-day guarantee is set in place for you for free.
I was just reading the questions on the side, and Valerie, I actually just did a closing on a HUD home this week. So yes, we do. Like Stephen said, we do finance HUD homes as long as they meet the qualifications.
Absolutely.
All right. So next benefit to finance at SAFE is the simple modification I just talked about for $500.
Check mark there.
Yep.
We offer year-end bonus dividend payouts. So if you are currently a SAFE member, you know that at the end of every year, December 31st, in your savings account, a portion of interest is paid back to you on any of the loans that you have paid on, your auto loans, your personal loans. And we offer that same payback on our mortgages. So if you have a mortgage with us, we do year-end dividend paybacks on that as well.
All right, next thing, we don't sell our mortgages. So for the life of your loan, your mortgage will always remain on your SAFE account. So what does that say to me? Convenience is what I think of. If you ever have a question, you can go into a branch, speak with someone face to face, to talk to someone instead of, having to wait on the phone, get transferred here to there. You can just walk in, talk to someone about your mortgage on your actual account.
You don't have to guess who you're going to pay your mortgage to by the next month.
Yes, exactly.
That's an awesome thing to have. We waive our origination fees for our first-time home buyers. Just like we said previously, that's a benefit that we offer to our members that are first-time home buyers. We waive that $9.50 origination fee.
And no risk-based pricing. So no, we're not going to charge you more fees based on your credit score. We go off of a rate sheet, so it's going to be determined by your term that you choose, how much you're putting down, and what product is how your interest rate is going to be calculated, or what's the right word? Not calculated. So that's how we'll determine your interest rate. There we go.
Yeah, there
So,
you go.
so yeah, we're not going to give you a higher
Calculate.
fees or higher interest rate just because your credit's lower or anything like that.
That's right. And then after every closing, we offer a pre-approved credit card to all of our members who don't already have one. This pre-approved credit card does not require a second credit pull. It's as simple as calling into our loan service center, letting them know you just closed and you want to go ahead and get your credit card. They'll fill out the application for you. They will use the same credit report that we used for your mortgage and issue your credit and get it in the mail to you. These credit cards come in handy when it comes to buying new furniture for your new house. Any extra expenses that may happen with your construction loan down the road. These things have been fantastic, and we have a great credit card product here at Safe. The interest rate is a variable rate, but it does not max out over 18%. That is crazy. Look at Lowe's and Capital One. Those are all in the 20s. And our current rates right now are not even at the 18%. That's just as high as they could go, but they aren't even at that percentage. They're at a very low rate right now. So that's a fantastic offer that we give our members.
Also, it's 0% interest for the first year on
Absolutely.
any purchases. So like he said, furniture, you want to put it on the card, but you don't want to pay interest. Just pay it off in that first year at 0%. Or you've got a credit card and you want to transfer the balance over, it's only 1.99% interest for the first year and no balance transfer fee. I've yet to see a credit card that says no balance transfer fee except for the Safe card. And there's one more thing that we did skip over: local processing and underwriting. So that means, all of your processors are here in Sumter, the underwriters here in Sumter. Our whole mortgage department is here, in our operations building on Westmark. So your information's not being sent, from state to state to random people. So we are all here in Sumter, based in Sumter, our whole mortgage department. It just makes things easy just to ask questions, between our processors and underwriters to make your process smooth.
Absolutely.
All right, so don't forget, there is a survey at the end for you to complete. We will put it in the chat box. So make sure you stay tuned to the end of the presentation, and the survey will be sent in the chat box for you to click on and fill out and submit. And then make sure you put your name, email, and phone number in there so we can call you to let you know if you win.
All right, guys, that is it for us tonight. We have tried to cover as much information as we possibly could in this last hour. Just went over a few minutes here. I'm going to double check. Ashley, would you just make sure there aren't any other questions that maybe we didn't cover? But we thank you guys so much for joining us tonight. It has been a real pleasure. We are so thankful that you allowed us to share our knowledge with you, and we're hoping that it will help you in the future. If you need anything at all, our contact information is displayed on the screen. You can call or email either of us to help you moving forward.
And we only finance homes in South Carolina. So Kendall, if that answers your question there, only South Carolina. And then Becca, yes, you can call either one of us to schedule a meeting or an appointment to meet with us in the branch, whichever branch you'd like to meet at. That's convenient for you. Just give us a call. Here's our numbers again on the screen. Let's see. And just make sure if you do want to schedule an appointment with us, don't just walk into a branch because we may not be there. We do travel to all the different branches. So me, Ashley, I cover Shaw Branch, Westmark, and McRae's Mill.
Mm-hmm.
And then Katie covers Manning, Lewis Road, Oswego, and Sumter City.
That's right.
Well, sorry, Sumter City, you can't sit down and meet anybody there, so scratch that one off.
Just give us a call. We'll set an appointment. No worries. But thanks again, guys, so much for joining us. We really appreciate it. We look forward to talking to you guys in the future, and we hope you have a safe night.
Thanks, Mike. Thanks, Antonio.